So in this video, I want to show you exactly what I would do if I was starting with $100. You see a lot of people online, they're making thousands of dollars per day, tens of thousands of dollars, in a single trading day. But you got to keep in mind, those guys have huge accounts, right? Six-figure accounts, $50,000 accounts. So what I want to do in this video is kind of cater to the people who don't have a lot of money, maybe only have $100 in your account, a few $100s. I want to show you how I would go about getting that account, from 1,000 and eventually taking it to 10,000. Now, the main strategy I would focus on if I only had $100 is going to be using supply and demand. So there's mainly two setups I take when I trade, and supply and demand is one of those setups. It's my favorite setup to take. And this video, I'm gonna go over exactly how to find supply and demand zones, what confirmations I look for when it comes to supply and demand zones, how many contracts you should be trading, and how to scale your account from there. So if you're starting with a small account as low as $100, you wanna focus on the most high quality setups as you can. The reason being is because you can't afford to take too many losses, right? If you take too many losses, you're not gonna have enough money to trade with, since you're only gonna have around, $100 to $200 portfolio if you're starting out with that, okay? So what I recommend as the most high quality setups is using supply and demand zones. So I'll show you an example of what supply and demand zones are. We can see we're on the 5-minute chart of the S&P 500. We've had a massive sell-off overnight, and today we bounced literally to a T to my demand zone. And I actually wrote out this demand zone inside my Discord group. You can see if I pull this up, I post basically my levels and my plan every single day in here. We can see we opened up around right here. We, basically just went through this range and we end up bouncing right at this 44.21, this 30-minute demand zone. As you can see, we've been bouncing off it now over the past few hours. So anyways, let me go ahead and show you how to find demand zones, right? How to find these supply zones, because this is going to tell you where you're potentially going to enter the trades, right? So you can find supply and demand zones on any time frame. I typically like to do, a minimum of a 30-minute, right? So I'll always start in a 30-minute time frame. And what you want to look for when it comes to supply and demand zones is two main things, right? Where did price reverse at? And where did it have massive follow through? Okay, so if we look back, we can see we basically had a massive move up. And as you can see, we haven't tested this area since, basically last week, right? And we've came all the way down since then, and we've created supply zones along the way. Now, the way I found this 30-minute demand zone before, the market even opened today was I have to go back to where price was around here, right? So if we're on the 30-minute time frame, we can see we kind of consolidated in this range here. Basically came up, we were trending down, we sold off around 20 or 10 points. And this is where price actually reversed, right? Ever since we made these lows, we haven't tested lower than that since then. And we had a massive, pretty much 100-point rally. So the way I actually drew this 30-minute demand zone is, let me actually delete this so you guys can see how this works. Again, we're on a 30-minute time frame, and I want to look for, let me zoom in so you guys can see better. I want to see where the price reversed, and I want to see good follow through. So we can see this isn't the most perfect demand zone, but obviously it ended up working out, and it made the most sense based on how price is trading to mark this demand zone. So basically, I'm looking at this candle right here. You basically want to see a basing candle of the opposite color. So in this case, I want to see a red basing candle followed by a green candle that closed at the very top. That tells me buyers were very strong from the last point we got in this level. There's probably a lot of orders left on this spot. And chances are, if there's a lot of orders here, right, next time we test this range, it's going to get bought up quickly, basically like it's doing today. So anyways, I'll just draw a zone from the top of the body on this candle, right? So the top of this body to the bottom of the wick. Right? Okay, and I mark this, and then let me just go back here and zoom out, and then I'm basically just gonna drag this box all the way to where we are. So as you can see, that's basically all you have to do to find this zone. So price can bounce anywhere from the top of the zone to the bottom of the zone. It really just depends. Now, as we can see today, it bounced literally, within 1 or 2 points from the top of the zone. Now, let's go to the supply zone that we formed on this 30-minute chart, right? Again, same thing. We're looking at, where did price reverse, right? Price is going up like crazy. We finally started to come down here. And as you can see, we started to sell off, 20 plus points. Let me just zoom out here, and eventually, we sold off, 40 points, and this was actually the high. So this zone was super helpful last week because, as we can see, we got very close to the zone and we had a massive sell off from there if you're holding that position overnight. So anyways, how did I find this 30-minute supply zone? Well, as we can see, we want to find the opposite color. So we have a green basing candle, and I basically drew this box from the top of the wick to the bottom of the body. This candle is very strong. It closed at the very bottom. So this told me, sellers were there. Sellers were very strong there. And as we can see, that was pretty much the high that we made. Every time we tested this area, this zone, we ended up selling off. And that was pretty much the top of the market. Now keep in mind, you won't always be able to find these zones on a 30-minute time frame. Sometimes you're going to have to go to a 2-hour time frame, for example. And we can see way down here, we have a 2-hour demand zone. So if I zoom into the charts right here, right, as you can see, we're downtrending like crazy and price finally reversed, right? And this was the point where price actually reversed. And as you can see, we had a red basing candle, so opposite color candle, followed by another 2-hour candle, closed at the top, another 2-hour candle, closed at the top, making new highs and eventually rallying from there. So we can see this is a very strong demand zone. This is where price finally reversed from the strong selling pressure we had. And again, same process here. We're just on a different time frame. I drew this box from the top of the body to the bottom of the wick. And this is our zone. We can bounce anywhere inside of this. So next time we come down here and test this, right, I'm definitely going to be looking to place a trade long if I see price action starting to show strength. Now, I did want to mention, if you have trouble drawing zones, you feel like you just don't understand them well, I do have a public Discord that's completely free and open to the public where I post my zones, I post my levels and my trading plan every single day in here. So if you guys do want to join this, like I said, it's completely free. All you have to do is click on the first link in the description below. I'd love to have you inside our trading Discord community. Now, one thing you got to keep in mind when you're using supply and demand zones is they're not always going to work. There's been plenty of times where I've taken a trade where I was long in a demand zone and we broke through it and I got stopped out, or vice versa. We're at a supply zone, I shorted the market and we ripped up past it and I got stopped out, right? So the best thing you can do when it comes to supply and demand zones, my favorite setup to take is looking for confirmations inside the zone, okay? So me personally, the setup I like to take inside supply and demand zones is either going to be a double top or a double bottom. So we can see this is a perfect example of a trade I love to take. This is probably my most successful trade that I do take, is something like this, right? We can see we're inside of this demand zone. Market opened 7:30. So market opened literally on this candle right here. And we can see, I didn't know that price was going to reverse, especially when the market first opens. I don't like to trade the first 5 minutes of the market open. So I would have missed this opportunity and I didn't know we were going to reverse there, right? Again, you can't always trust and rely that demand zone means, price is just going to skyrocket up, right? Like I said, this could have easily broken through. And if you would have got in right here, right, you could have got stopped out. But in this case, as we can see, we had this nice 5-minute reversal candle. We went to VWAP, we sold off again. And what we ended up doing is we formed this nice little double bottom, right? It wasn't perfect, but as you can see, we dipped down back to this level, right? The bottom of this demand zone. And, the lows here was 44.09. Right, so we could have got in somewhere in this range around 44.14 and we would put our stop loss, just below the lows. And this is why I like double bottoms, because it makes you risk less money. If I wasn't waiting for a double bottom on this trade, I probably would have ended up getting in like right here. Let's say I was just waiting for this 5-minute candle to close. I would have had to gotten in at like 44.19. And that's where you have to ask yourself, how much are you going to risk? Where are you going to put your stop loss, right? In this case, I would have to put my stop loss below this candle, which is 44.09, which means I would have to risk 10 points on this trade. Now, me personally, the way I trade, I don't want to risk 10 points, right? I typically like to risk 5 or 6 points maximum. So that's one of the things I like about double bottoms is once we come down and test, near this level, it doesn't have to be perfect, right? It gives you a much better risk to reward. You don't have to risk as much points, as much money on your trade. As you can see, we had another 5-minute reversal candle. I could have even waited for this candle to close and, got in, let's say right here and put my stop below, this candle instead. That's another option you can do. As you can see, we ripped up from there, proving to us that this demand zone actually did work. Now, if we go back to the demand zone that we had today, as we can see, let's go ahead and look at this. Price was pretty choppy in this zone. There wasn't really any signs of reversal. The VIX was very strong. So me personally, I did not take this trade on this demand zone, even though, looking back at it, I wish I would have. But it just didn't follow my system, right? There wasn't enough confirmations for me to personally take this trade, even though we perfectly hit this demand zone to a T, right? So again, there wasn't really any 5-minute reversal candles. I mean, there was a few here, but the volume was just super low, is super weak looking. So me personally, I was waiting for us to come up and come back and create that double bottom. As you can see, that's never really happened. I mean, we could... there's still a few hours left in the day, so we could easily come back down and test this, whether it's later in the day or maybe it happens tomorrow. And that's going to be the trade I'm going to be looking for pretty much over the next 24 hours. So you got to keep in mind when you're using certain confirmations, you're going to miss some trades. You're going to have fear of missing out. Like I could have a lot of FOMO right here because, we perfectly bounce off my zone, I didn't even get into the position. So you got to keep in mind when you're using confirmations, sure, you're going to miss out on a few of your trades because those confirmations didn't trigger for you. But the plus side of it is it's going to make you have a lot higher win rate, which is ultimately what you need when you're starting out with, a $100 to $200 account size. Now, the cool thing about trading futures is I could go and trade in Q, right? So a lot of the trades I take is actually on the Nasdaq. So if we switch over to the Nasdaq, we can see, even though, the ES didn't form that double bottom inside the zone, as you can see, Nasdaq perfectly did, right? We came up, we started showing strength. This is like the same time ES was starting to, trade choppy at that demand zone. As you can see, Nasdaq went up, we came down, we retested it. We formed a nice, perfect looking double bottom. And, you could have taken this trade. So that's kind of what I look for more is these double bottoms inside these key levels, right? Inside these key demand zones or looking for a double top inside those key supply zones. So don't always think you have to be married to just trading the S&P 500. What I like to do is look at the Nasdaq and the ES, see how both of them are trading and see which one gives me the most confirmations. And from there, I can decide which one I actually want to take a trade on. Now, if you're wondering how much you can actually make with a very small account, let's say $100. Well, if you trade the MES, which is what I trade, it's just basically a smaller version of the S&P 500. The brokerage I use is a brokerage called Tradeovate. You can trade futures with it, and they don't require you to have that much money to trade, contracts for the micro ES. Okay, so basically, the way this works is you're going to need, they require you to have at least $50 per contract you trade. Now, you do have to keep in mind, if you only have 50 bucks, I wouldn't recommend trading one contract. I would just deposit more money until you have at least $100, right? Because let's say you do take a trade, you buy, you have a $50 account size and you take a trade. Well, if you have any drawdown, they're automatically going to liquidate your account because you don't meet the minimum threshold because like I said, you need at least $50 per contract, right? So what this means is I would recommend having at least $100, ideally $200 per contract you trade. So if you are starting out with 100 bucks and that's all the money you have, that basically means you can take one contract on your trade, and I'd only do, high quality trades that you have a lot of conviction in. Okay, so basically what this means is as far as the MES goes, you're going to make $5 per point. And usually, a decent trade for me is going to be around 10 points when you're trading the ES. Then that means you would make around $50 in profit. So this is kind of the game plan I would use if I was trading and starting from scratch with a $100 portfolio. Trade with one contract, only focus on higher quality setups like supply and demand, like I just showed you. And then from there, once you start growing your account to $500 or $1,000, that's where you can start trading with, 2, 3, 4, even up to 5 contracts if you have that $1,000 portfolio. And that's where, instead of making $50 per day, on a decent trade, let's say you're getting 10 points, right? That's where you'd be making, 100, 200, and even $300 per day. So that's the whole game with trading. You want to slowly scale up your account, right? You don't want to go from 1 contract to 5 contracts to 10 contracts, right? You really want to focus on earning how many contracts you can trade, because if you scale up too quickly, you're going to be more emotional when you're trading, which is going to affect your performance. So even one thing I do, like if I have a bad trading month and I just didn't do as good as I wanted to, even if I'm still green, I'll actually, scale down how many contracts I'm trading. So let's say I'm trading, 30 contracts of the MES, right? If I have like not the best month, I'll scale down to 20 contracts. And then let's say that month where I traded 20 contracts, I did good, right? Then I'll scale up to 25. And then let's say I do good again, then I'll get up to 30 again. But there's going to be a certain point where it kind of teeter-totters. Like you notice, like, man, every time I trade with 20 contracts or 25 contracts, I trade really good. As soon as I scale to 30 contracts, I end up taking bad trades. I don't know why, but that's what ends up happening. So if you notice that happening to yourself, right, you have to be aware of that and just kind of tell yourself, you know what, maybe I should just stick to 25 contracts for at least the next 3 months, the next 6 months, right? So that's one of the big mistakes I see, especially with small accounts. They'll try to scale how many contracts they're trading way too quickly, it makes them more emotional. And then all of a sudden, they take a big loss. It wipes out all their gains that they've been making for the past month or two. Again, you have to play the game of slowly scaling it up. Start with 1 contract, prove to yourself you can be profitable for at least a few weeks, then go to 2, then go to 3, then go to 6, then go to 8, right? And just slowly scale it from there. And like I said, the most important thing, earn your ability to trade with more size. That is ultimately the best way to scale with day trading. So anyways, guys, I hope you enjoyed this video of the strategy of how to actually grow a small account and ultimately how to do that trading supply and demand. Like I said, guys, if you have trouble coming up with your supply and demand levels and you kind of just want to see, the levels I'm marking on my charts each day and my trading plan, be sure to join us inside our private Discord community. Like I said, I'd love to have you in there. All you have to do to join is click on the first link in the description below or just head over to this link right here. As always, I hope you have a great rest of your day. I will see you in my next video.